talking about what your business is worth to something that can destroy your business from the inside out, employee benefit costs. And this is something that from the fractional family office floor here, just a segment where we like to just talk through what are we doing within our business. Our health insurance renewals came back 17.5% year-over-year increase. Before we went live here, I was talking about another entrepreneur who's paying over $2 million a year in premiums for their whole company, over 300 employees, and it's a 70% year-over-year increase. So this is the new normal, and it's about to get worse. So we've got some data, but I know when we got sticker shock, we pay the full premium for our employees. We subsidize if their family's on our plan too, but this is turning into a bigger and bigger line item in our P&L every single year. And I got some data here that just shows that the average employer is seeing an increase in 5 to 9%, which doesn't actually sound too terrible when you look at 17.5%. But I felt better when I was coming in at 17.5% when I was hearing some of these others at 70% year-over-year increases. So something's broken here with this, because it's weird that business owners now are the ones that are expected to pay for all of this health insurance. And there's a lot of stagnating wages. But then if you actually look at the data of cash compensation plus all of these benefits, it actually is tracking with inflation. So yes, cash compensation hasn't held up, but the actual issue is our insurance. And really that goes into our medical. And there's just issues societally here with the cost of medical coverage.
Yeah, and by the way, our clients get cost of living adjustments every year in addition to the health insurance. One of the problems with this is for an employer, employees don't really see this as a big deal, right? Like if your premiums go up by 17%, no one's telling you how great you are for covering their health insurance. So it gets lost in that translation. And I remember one time a very smart person in this space told me years ago, the biggest mistake our country made on health insurance was tying it to the business.
Yeah.
So the employees get insurance at the business rather than having it like car insurance where it's a direct from consumer. But whether you could debate that or not, it is something that's really hard on businesses. And as you said, what a lot of businesses are doing is just not giving cost of living increases to the employees because they're saying, hey, all that money's going to the insurance.
Yeah, I mean, 17.5% is crazy. So 59% of employers who were surveyed said that they are going to make cost-cutting changes to their insurances in 2026. So they're looking at changing the plans that they offer, higher deductibles, cutting health insurance coverage altogether, and then some variables that are driving this. So specialty high-cost drugs, so GLP-1s for weight loss, that's been attributed to adding 1% alone in terms of like inflationary growth because so many people are on these GLPs. Mm-hmm. And so interested to see if President Trump can actually implement this most favored nation negotiation strategies that he's talking about, because yes, as Americans, we are definitely subsidizing the whole world's consumption of our pharmaceutical industry. And is it fair for us to be footing the bill for the R&D of the whole world? I don't necessarily know if I agree with that. Catastrophic claims are increasing, like cancer, those are huge out-of-pocket expenditures. Healthcare providers are consolidating, so they have more pricing power. So they're acting more and more like monopolies or duopolies. And then also post-COVID utilization surge. And so a lot of people weren't going to the doctor for a while just because of the issues. And now there's kind of like this backlog of kind of stuff that people were feeling. It's kind of what some of the experts are saying. And now all of that's getting kind of pushed through. So these were some of the drivers, it looks like, of what's pushing these costs up so much year over year.
Yeah, it's a big issue. And I remember a few years ago, here in town in Scottsdale, Mimi and I were at a steakhouse. I won't say the name. And when the bill came, there was this charge on there. I think it was 7 or 8%. And it had this very cryptic explanation, a line item. I was like, what in the world is that? So I called over our server and I said, hey, what is this added fee here? And he goes, oh, well, that doesn't go to me. That was the first thing the server said. And I was like, okay, well, like, what am I paying for? He goes, I don't know, but it doesn't go to me. I'll go get a manager. And the manager came out. And I said, what is this? And he said, oh, that's to pay for the health insurance. I said, whose health insurance? Our servers, our cooks. It goes to pay their health insurance. So then I called our server back and I said, this does go to you. This helps. This is paying for your health insurance. He goes, no, it doesn't go to me. I go, it pays for your health insurance. He goes, but that doesn't mean it goes to me, which shows the disconnect. Well, it turns out 6 months later, there was a class action lawsuit against the steakhouse because you
really?
can't do that. You can't just put a line item to pay the health insurance for your employees and make your customers pay for it, evidently. So they took that off. So I've been to that place since, and they don't have that line item anymore. But I thought, in a way, that's creative.
Yeah.
You know, I also felt in a way it was dishonest, like to slip that in there and to hit me with it. Like, just raise the prices of your food.
Yeah.
I'm fine with that. But putting something in there, and then, of course, the servers don't feel like that, you know, I still have to tip 20% or they're going to be mad at me.
Right.
And yet that's getting their health insurance paid for. So anyway, that's how far the problem, how deep it goes.
Should we debate now on, do you tip on pre or post-tax dollars, or is that too messy of a conversation to have?
If Mimi listens, luckily Mimi probably won't listen to our podcast. She hears me enough. But yeah, you look it up anywhere you want. You should not tip on tax.
I'm with you.
No tips on tax.
I'm with
because
you.
then, and my running joke is, you know, if you're in a jurisdiction that has a higher tax on food or on whatever, then all of a sudden you pay more to the server. That makes no sense.
Yep.
And I've never gone into a restaurant at the end of a great meal said, hey, I just want to thank you for how you handled the tax tonight. It was incredible. It was done perfectly. It was delivered perfectly. Thank you for the tax. I'm going to tip you on that.
All right, well, let's talk through back to insurance. So in 2025, the average all-in employer cost was over $16,000 per employee. Employees on average contributed 21% of premiums on average. So like I mentioned, we pay 100% of the premiums for our employee. If their family is involved, we just subsidize the rest there. So yeah, definitely very interesting data here. The total employer cost is about $4,800. And so the $16,000 number there is just like the all-in cost of the insurance between the employee and the employer. So what are some entrepreneurs doing, right? Increasing the deductible. So going to HDHP plans, high deductible healthcare plans, pairing those with HSAs. I know we love those, just more so from a financial planning perspective. HSAs are amazing. And I know we talked about that.
Yeah.
Narrow network plans, increasing cost sharing, wellness program incentives to reduce utilization. That's a big thing that I'm actually seeing a lot of with bigger 9-figure businesses. And then they're moving a lot more towards using captives and self-funding a lot of these plans. And so like the client there, or not the client, but the entrepreneur that I was giving you that example of spending, you know, multiple 7 figures on insurance premiums, they're going with a captive approach, which really means that they're just self-underwriting this, building up of reserves, and then they're also then more incentivized to roll out wellness plans because it's all based off of the actual utilization. And so there's like an actual alignment there. And then those tend to be the same businesses that are rolling out gyms, they're rolling out blood panels, they're doing a lot of offensive healthcare work to help, you know, reduce those chronic health issues, because now they're saving dollar for dollar on what's not getting paid out.
Yeah, the preventative stuff. That's really smart.
Yep. So you got to get to a certain size. I think 100 employees is kind of the rule of thumb before you should start looking into those, where the premiums start making sense. But it can also be a nice little tax play too. If you have positive underwriting, then you can actually profit, quote unquote, some of the underwriting there.
It's such a big problem, and I hope that someone will disrupt the healthcare system in a way that helps us, because I don't see the government fixing this. Unfortunately, a government just likes to spend more money. They don't like to fix the problem. We've got all kinds of problems in our healthcare and especially health insurance industry. It's really tough.
Mark Cuban, he's doing cost plus drugs. I don't know if you've heard of that.
No.
But like, right, former Dallas Mavericks, billionaire,
I know
cost
who he
plus
is.
drugs. And I think it's like cost plus 10 or 15%. And it's actually interesting. I've listened to some podcasts about how he's doing it, and he's running into huge issues with the PBMs.
Yep.
Everyone's trying to box him out and not allow him because he's very transparent. And so, if he can't do it, I don't know if anybody can. But yeah, hopefully this administration can help loosen the rules and allow some more competition, because we're the ones who are paying, you know, for this. And
100%.
I don't think we want to turn into Canada and have 6-month waits to get MRIs.
No, and you know, I mean, unfortunately, the key is, and a lot of times when you talk about the broken healthcare system, one of the reasons it's broken is it's like the old the cartoon that was written, I don't know exactly when, but it was based off of a quote from the War of 1812. But I've seen the enemy, and the enemy is us. I feel like part of the problem with healthcare is the fact that as Americans, we're not healthy, and people are not taking care of themselves. So yes, the system is broken, but we also have to get healthier, and that's the preventative stuff, the eating better, the exercise, all those things that go into being healthier.
Yeah.
And unfortunately, people aren't doing that across the country, and that creates a lot more health problems in older years.
Yeah, I mean, there's definitely structural issues with the protections that are put in place against the pharmaceuticals, and they have incentives and all that kind of stuff. But I love the idea of, what if we just tripled the amount that people could contribute towards their HSA? And then what if like gyms and all of these different things that we know are better for people can be written off using pre-tax dollars like HSAs? And so just broaden the use of that tool so the government helps subsidize it by allowing those HSA contributions to go up. And then anything that's involved with health and wellness can be written as supplements, etc. I mean, of course, you'd have to do some anti-abuse, but that just makes a lot of sense to empower people to make their own decisions instead of going through an antiquated system.